You've been watching the headlines, maybe even checking Zillow every night, and you're wondering, will home prices finally drop in 2025? If you feel stuck, saving for years while prices just keep climbing, you're not alone. Right now, America's housing market is standing on a razor's edge. After years of soaring prices, fueled by record low interest rates during the pandemic, the dream of owning a home feels further away for millions. And even though the Federal Reserve's aggressive rate hikes in 2023 and 2024 cooled some markets, affordability remains a national crisis. The question isn't just will prices fall, it's where, by how much, and what does it mean for you? Early forecasts for 2025 are split. Some experts predict a gentle decline in prices, around 1% to 3% nationally, while others warn of sharper corrections in certain overheated areas. Meanwhile, a few believe supply shortages will keep the floor under prices higher than buyers hope. By the end of this video, you'll not only know what to expect, but you'll be armed with practical strategies to navigate the year ahead, whether you're buying your first home, investing, or just waiting for the right moment. So, what are the experts actually saying about home prices in 2025? Let's start with the big names. According to Goldman Sachs, the national housing market will experience a very mild correction, with home prices projected to fall between 1% and 2%. They argue that while higher mortgage rates have reduced affordability, low housing inventory will prevent any major crash. Simply put, there aren't enough homes for prices to fall too far. Fannie Mae offers a slightly different take. Their economists expect home prices to stay flat or even rise modestly by about 1.5% by the end of 2025. They believe that as inflation cools and the Federal Reserve begins cutting rates later in 2025, buyer demand could slowly pick up again, providing fresh support for prices. Meanwhile, Moody's Analytics warns of more regional pain. In their forecast, home values in some overinflated markets, like parts of Texas, Nevada, and Idaho, could drop by 5% to 10%. But nationally, they see a decline of no more than 3%. What about Zillow and Redfin? These platforms relying on massive data sets predict a soft landing. Zillow projects national home prices to increase slightly by 0.2% over the course of 2025, while Redfin suggests a potential decrease of about 1%, especially early in the year. Here's the bottom line. Major crash? Unlikely. Gentle correction? Very possible. Regional volatility? Almost certain. One major theme stands out across almost every forecast. Inventory is the wild card. If builders can't bring enough new homes to market and current owners stay locked into their ultra-low mortgage rates, then supply will remain tight. And tight supply keeps prices propped up even when demand softens. In other words, even if you're hoping for a big price drop in 2025, the most likely outcome will be smaller, localized declines, not the housing crash many headlines love to tease. Not every market is created equal, and 2025 could be the year this becomes painfully clear. While national averages might show only small changes, some cities and states are likely to feel a much bigger impact. Let's start with the hot spots where experts expect prices to dip the most. Texas. Major cities like Austin, Dallas, and San Antonio saw massive growth during the pandemic housing boom. According to Moody's Analytics, Austin could see home prices fall up to 7% in 2025. Why? Overbuilding and softening tech sector job growth are finally catching up to the market. Florida. After 2 years of sky-high appreciation, markets like Tampa and Orlando are cooling fast. Rising insurance costs, climate risks, and slowing migration patterns mean some Florida metro areas could experience price drops of 4% to 8%. Nevada and Arizona, cities like Las Vegas and Phoenix, which became relocation magnets during the pandemic, are also vulnerable. Affordability issues and investor pullbacks are pushing home values downward. Some forecasts predict 5% declines or more. California, even California's pricey coastal markets such as San Francisco and San Jose may not be immune. High mortgage rates combined with the remote work shifts have already put pressure on these once red-hot areas. Certain zip codes could experience price declines in the 5% range by mid-2025. On the flip side, some markets are holding firm or even slightly appreciating. Cities in the Midwest like Cleveland, Cincinnati, and Milwaukee, and parts of the Northeast like Pittsburgh and Buffalo are considered more affordable and less prone to volatility. These areas might see price stability or even minor gains in 2025. The key takeaway: if you're shopping for a home or considering selling, location matters more than ever. A 2% national decline sounds mild, but if you're in a previously overheated market, the drop could feel a lot steeper. Understanding why prices might move in 2025 is just as important as knowing where they'll move. Several powerful forces are shaping the real estate battlefield, and they all interact in ways that most people overlook. One of the biggest influences is mortgage rates. After soaring past 7% in 2023, mortgage rates are finally expected to cool. Analysts at Fannie Mae predict that by the end of 2025, average rates could fall to around 5.9% as inflation eases and the Federal Reserve considers rate cuts. While lower rates will certainly spark new buying interest, they won't magically solve the affordability problem. Home prices remain historically high, and after 2 years of uncertainty, many buyers are still feeling cautious about taking on big loans. Another major factor is the persistent shortage of homes. Despite higher interest rates cooling the frenzy, the U.S. housing market still faces a staggering supply gap, estimated between 4 and 5 million homes. Many current homeowners are rate locked, sitting tight because they don't want to trade their 2 to 3% mortgage rates for something higher. Builders, wary of economic conditions, have also been slow to flood the market with new inventory. As long as supply stays this tight, even a drop in demand won't cause a massive price collapse. The broader economy will also play a crucial role. If the job market stays strong and wages keep rising, even modestly, it will create a cushion that helps the housing market avoid serious trouble. However, if a recession looms later in the year, we could see an uptick in distressed sales, which would push prices lower, especially in markets that have been riding high for too long. Government policies could inject even more complexity. New proposals like expanded first-time homebuyer tax credits or aggressive affordable housing programs might stimulate fresh demand. But if those policies don't come with meaningful boosts in housing supply, they could actually drive prices higher, making homes even less accessible for average buyers. Finally, investors are a wild card. In recent years, institutional investors gobbled up thousands of single-family homes. Higher borrowing costs slowed that trend in 2024, but if rates fall again, big money could flood back into the market. This would reignite competition, especially for starter homes, and put upward pressure on prices just when individual buyers are hoping for a break. The bottom line is clear: the housing market in 2025 won't move in a straight line. It's going to be a tug-of-war between falling mortgage rates, stubbornly low inventory, economic strength, government intervention, and investor behavior. How these forces interact will determine whether home prices dip modestly, stay flat, or even start climbing again before the year is over. If you're planning to buy or sell a home in 2025, the next moves you make could be crucial. For buyers, the message is simple: patience and preparation will pay off. With rates likely to fall and some regional price declines expected, it's smart to keep your financial house in order right now. Focus on strengthening your credit score, building a strong down payment, and getting fully pre-approved for a mortgage. When prices dip, even slightly, the most prepared buyers will move fastest and secure the best deals. Also, be strategic about location. Instead of hunting in overheated markets, consider areas where prices are stabilizing or even slightly falling. Flexibility could save you tens of thousands of dollars. For sellers, it's a different kind of market. Gone are the days of multiple offers within 24 hours. In 2025, pricing your home correctly from day one will be critical. Buyers are far more cautious now, and overpriced listings will sit longer. If you're planning to sell, focus on making your home move-in ready, offering incentives like covering closing costs and working with an experienced agent who understands understands shifting market dynamics. Selling now before more inventory returns to the market could also help you lock in a better price. Above all, timing and mindset will separate the winners from the frustrated. Trying to time the bottom of the market perfectly is nearly impossible. Instead, focus on buying or selling when it makes personal and financial sense for you, using real numbers and real strategy, not just headlines. The 2025 housing market won't offer easy answers. While a national crash seems unlikely, targeted price drops and regional shifts could create both opportunities and risks depending on where you are and how prepared you are to act. The biggest lesson? Stay informed, stay flexible, and don't let fear or hype make your decisions for you. Focus on what you can control: your budget, your timing, and your goals. Whether prices fall 2% or 10% in your area, the right strategy will make the difference between regret and reward. So here's the real question. Are you positioning yourself to take advantage of the opportunities ahead, or will you watch from the sidelines again? Drop your thoughts in the comments. If you found this helpful, hit that like button, subscribe for weekly housing insights, and turn on notifications.